Hello, everyone. Once again, welcome to our webinar with Ezekiel. Today's will be the last seminar with Ezekiel's for this season. Yep. So, uh, without further ado, let us start the webinar. All right. So today we will have Ezekiel to share with us about developing your personal trading system. Yep. So before that, allow me to do a simple introduction about our company. Maybe some of you have not heard about our company yet. Yeah. So our company is Markets for You. So previously we are known as Forex for You, and we have been in the market for 18 years. Yeah. So throughout the years, we have received more than 35 global awards in this industry. Yeah. And we have already successfully executed more than 1.3 billion orders. Yeah. And then, as you can see from this slide, here are some of our exceptional trading conditions. First, we have these instant deposits and withdrawal functions that allow you to get your money or deposit your money as soon as possible. And then, other than that, we are also pioneer in copy trading system. Our system is called Share for You, which allow followers to copy experts or leaders' trades and copying their success. We are also having very competitive spreads, which is start from zero point 0.1, and our leverage is one of the highest in the market, which is 1 to 4,000. Yeah. Other than that, our execution speed is also very fast. We call it lightning fast. So in 0.1 seconds, we can help to execute your orders. Okay. Other than that, we are also having these pure swap-free accounts that is very friendly for our Muslims followers or traders. Yeah. So let me introduce a little bit about Ezekiel, our speaker for today first. So Ezekiel was the founder of Asia Forex Mentor. Maybe some of you have already joined our webinar previously. So we have already 2 sessions with Ezekiel, which I believe people who attended the webinar actually learned a lot from Ezekiel. Yeah. So I don't want to waste more of your time. Maybe we can save more time for you guys to ask questions later. So without further ado, let us welcome Ezekiel. Hi, Ezekiel.
Hi.
Hi.
Thank you, Yu Chong. Okay, so yeah, good to see you all again. And this is our third webinar that we have with Markets for You, right? So if you haven't been to the first 2 webinar, man, you missed out the whole lot. Okay, but
Yeah.
this one, this webinar itself, it is actually like obviously all webinars that I hold are really good, or I would say really important. But this one, it's kind of going to show you how to craft your very own winning trading system. So I I think that if you have been missing something, if you feel that you have been missing something, you have been learning trading, you have been trading, but somehow or another you still can't grasp winning consistently. This is the reason why. And in fact, this is probably the 99% of the reason why most traders out there fail. It's because that they do not have their own system. Okay, so let me ask you this. Okay, before we start, please just say hi in the chat for me, please. All right, so that I know I'm actually talking to somebody live, right? Please say hi in the chat. If you can say you're from where. I truly appreciate it. So along the way, I mean, I'm giving up a lot of energy, right? So please give me the energy as well from your chats. Only way I can see is from your chats, right? So it's a two-way thing. If you got questions, ask the questions along the way. If you got doubts, you can ask. Sometimes I answer it. Sometimes I wait to the end for the FAQ, right? But we will try to go through all the questions itself. All right. So yeah, cool. Right. We got from Indonesia, Wales, Sweden, Australia, Nigeria, Botswana, Indonesia, UK, Malaysia, Philippines. Awesome. Netherlands. Right. We are keep it coming. Right. So we are from all over the world. Right. Hey Bob. Hey Chester. Bob. uh yeah, keep coming. Manila. Right, nice. All right, so yes, just keep it coming, right? Appreciate it. But the reason why I don't like to give fluffs, right? I don't like to give fluffs. And if you know my style, I go right to the point, right? So in today's webinar, 1 hour, I'll give you full on, right? Full on value over here. All right. So let me do a quick share of my screen if I can. Okay. Hey, thanks. Thanks, Kalen. Okay. Can I share my screen, Yu Chong? Thanks, Morgan.
A minute.
Okay. Let me see
Can
if you
you share
can
now?
allow sharing for me. I've requested it. Okay. But in the meanwhile, I want to touch on can see me. Okay, good. Yeah, I just want to share my screen.
Yeah,
There we
can you
go.
try to share?
Yeah, it works now. It works now.
Yeah.
Okay, so you guys are seeing my screen, right? Yeah. Okay. Cool. Right. So there we go. All's good. Right. So this webinar, it's about building your own winning trading system. Specify your own trading system. You probably, whether you have joined me, whether you have joined other courses, whether you learn from YouTube, learn online, etc. Right. Here's the thing. What you are learning, it's not that it doesn't work. What you're learning out there, it is a system taught or shared by somebody out there that works for them. All right, that works for them. But somehow or another, when you apply it on your own, it did not work as well for you. Okay, so here's why. You know why? I mean, the reason why is that we are humans. We are all different. I am different from you. You are probably different from your siblings if you have, right? Your characters are different. You are different from your friends, right? Your character is different. Your risk tolerance is different. Your the way you think is different. Your strengths is different. Your weaknesses are different. Your mindset is different. Your time available to trade in a day is different because you all have different jobs, right? Or whatever that you do, right? So we are all different in not just one way, in multiple ways. And that all builds up into me and probably like a fingerprint, right? Like everybody is different. So if I was to apply exactly what somebody teaches me their trading system 100%, right? It's not that I won't find success. I may find success, but it's because I've been trading for a while. I know how to tweak on my own, right? But if you take it directly 1:1 to you, chances are you may not find success right away, or you may not find success immediately, or you may not find as good as a success as the person who taught you, right? Or wherever you have learned from, right? So it boils down to this. So I'm going to break it down, right? I'm going to break it down. So it's like is there truly a one size fit all approach? Strategies work, right? What we can tell you is we can share winning strategies work, but then at the end of the day, we are all different. We execute differently, we exit differently, we trade the timings differently, our risk percentage is different, our capital is different. There's a lot of different factors such that there is not exactly a one size fit all approach. Okay, you following me? Right? So which is why we got to whatever that you've learned, however you've been trading, all right, it's good, right? But now we are going to fine-tune it. I'm going to show you why, and I'm going to show you how to fine-tune it to your own, to make it your own, such that you can never share this to anybody else the same way that it will work so well for you, because this is yours. You have built it for yourself. All right, you build it for your very own self. Okay, so first off, I'm gonna touch on the first thing, that why we are different, right? So the first thing is what? Personality. Our personality, we are all different, right? To a certain degree, most of us are different, even from siblings, right? We are all different, right? So some of us, for example, are more aggressive. Some of us are more conservative, right? Put in the chat, so I know what is the percentage of your. Are you guys more aggressive, more conservative? let's say if aggressive is fully aggressive is a scale of 10. Conservative is a scale of 1. All right. So 10 is really aggressive. 1 is really conservative. Where are you at in the scale itself? So see, put it in. Oh, 7, 7, 6. Put it in. So that we can actually see, are we seeing a common trend? Reflect on yourself. Like think about your own, based on whether you have been trading, you have not been trading, based on your own, however your experience has built you so far. Where are you at? Where are you at in life? Right? It need not necessarily be trading, it can be anything, but if it's in trading, that's great as well. Right? So, oh, we are seeing a lot of 7 and 6s. Huh? Right? So could that be a trend? Because 5 as well, right? Let's see. All right, a lot of 5s as well, right? Good. So it looks like you guys are pretty 5, 6, 7. Nobody's really on the extreme path, right? So like what you said, right? If you are really aggressive, versus somebody who's really conservative, versus somebody who is in the middle, right? We are all different. Even the 5 and the 6s could mean a lot of difference, or the 5 and the 7 could mean a lot of difference. The 7 could mean what? The 7 to the aggressive could mean what? When it comes to the time whereby you are triggered, I don't know, maybe you tell me yourself, when you are tilted, when you're triggered, and we tip you a little bit, or the market tips you a little bit, right? You may be inclined to do something impulsive. Maybe that's why you say you're aggressive, right? That's tiny tilt could be what that changes everything. Those 5, for example, right? Yeah, right. So even the numbering has its differences, right? So what I'm trying to say is that when you're aggressive, let's think about it this way. If you are and okay, personality, right? We are all different. All right. Then the next thing, it comes down to what? It comes down to our goals. Okay. Goals. Now, everybody goal in trading is probably different. All right. Some want to make, I don't know, let me know your goals, right? Let me know your goals. I do not know you, it may not be just share your goals if you can, right? How much do you want to make, right? How much do you want to make in trading itself, right? Do you want to make, let's say, a month, right? Realistically, how much do you want to make? Do you want to make, say, 10,000? You want to make 5,000? Or you're happy with 3,000? Or you're happy with 1,000? Or you want to make 100,000? I don't know. Realistically, nobody knows who you are. Just a name in a Zoom chat. Let me know. Right? All right. Monthly. How much do you want to? Ideally, we want to make that. Right? 5,000, 15,000. All right. Cool. Keep it coming. We are all different. Right? 4,000, 2,000. That's cool. Hold on. 50,000. Talking about USD. USD. All right. 10,000, 5,000. Right? All right, cool. Keep it coming. 1,000. That's realistic, Angus, right? 5,000. So if you see 10,000, 2,000, good. Right. Then my next question to you is this: based on all your monthly goals, right? All right. Based on all your monthly goals, right? How much are you going to put in as a capital? Assuming you want to make $10,000 a month, how much are you going to put in your capital? Right? If you tell me you're going to put $1,000 and you want to make $10,000 a month, there we go, right? How many percent ROI do you or are you going to make in a month? It's going to be more than 100%. It's going to be 1,000%, isn't it? Right? It's going to be 1,000%, isn't it? So if you see, this is what like, for example, let's say, or let's say you want to make 3,000 a month, realistically, maybe at the beginning, right? Maybe you want to make $3,000 a month, but then you tell me your capital is going to be 3,000 as well. So you're going to be making 100% in a month from 3,000 capital to make $3,000 a month, right? Now, obviously, it gets easier, but that's how it's going to happen, right? 100% in a month. Is it realistic? Let's think about it. If you put all in 3,000 to make 3,000, a flip of a coin, probably you're going to get it. But is that trading? Nah, that's not trading. That's gambling. So if you say that, okay, maybe I will risk 10%. 10% of $3,000 is $300, isn't it? 10% of 3,000 is $300. So $300, if I enter a trade and my risk to reward ratio is 1:10, my 300 would make 3,000. Okay, now we are talking. Is it reasonable now to make $3,000 from 10% risk per trade with a risk to reward ratio of 1:10? It is ambitious, but doable, but still ambitious. Correct? But here's the thing. Everybody is inclined to, why don't I risk more, right? But what if, there's always a thing that you got to check, right? What if, how many consecutive losses can you take, right? Assuming shit happens, you have 5 consecutive losses in a row, especially when you're aggressive, it's easier for you to have consecutive losses because you are tilted, right? You just enter on impulse trade, etc., right? So you're going to have in consecutive losses, maybe not back to back, maybe one after another, or maybe one win, one loss, two losses, one win, 3 losses, one win. It's going to drop real fast, right? So your 10% is probably not going to last you. By the time when you're down, like let's say 5 trades in a row, down 50%, it's going to kill you. So I hope that you see that what I'm trying to drive is we got a lot of 5, 6, 7 people. Let's say the 6, 7 people nearing the aggressive side, right? In order for us, we're gonna touch the whole thing, but let's talk about this first. In order for us to reach where we want to go, right? We all have an idea of where we want to go, but in order for us to reach where we want to go, we got to first taper ourselves down first. Taper ourselves down. Like, all right, I think it's not realistic, 3,000 to make 3,000 a month. No. Maybe I can make 3,000 and I reach 3,000 a month. I don't know, maybe in a year's time. Is it realistic? Right? In a year's time, maybe it's realistic. Right? So in the meanwhile, this one whole year, right? What I'm trying to do is not to focus on the dollars, but to focus on the percentage growth itself. Right? So we're doing already a tapering. I'm going to show you how to customize them, right? So you know, like the same thing, if you are really conservative, right? And conservative traders, so for example, aggressive traders can risk more per trade, right? We can risk 10%, we can risk more, right? But the conservative traders are probably, going to risk maybe 0.5% first. Then I'm going to see how it goes. And then, then maybe I will go it up to 1%, that kind of thing. Yeah, it's not wrong. It's not wrong. So this group of people, once their goal is to not lose their money first, right? To slowly grow their account, to not lose their money. It's not wrong, right? Aggressive people, on the other hand, if you can see the way I talk, I think I'm a little bit more inclined to aggressive. Aggressive people, on the other hand, is like, I want to make more money, I want to make more money, I want to make more money. But one thing you're going to realize is that when I was young, I was like, yeah, if you tell me out of 10, right, I probably an 11 of aggressive. But when you're young, you got nothing much to lose, right? I'm just gonna go all in. Okay, I'm just gonna go all in. I'm gonna risk. If I lose, that sucks. But I can start over again. But today I'm 41. I don't think I can be as aggressive as when I was 20. Right? Because why? Because we got commitments, right? We got family, we got mortgages, we got all this stuff, right? We cannot like all of a sudden just lose it all anymore versus the younger us, right? So this grows with age as well. Aggressiveness can taper, but but it's now tapered me. Today, if you ask me where am I am probably around 6.5 to 7. I was an 11, so I've already tapered myself down a lot. So what I'm trying to tell you is, again, everybody is different. We are aggressive, we are conservative, we are all different. Some in the middle, that's great, right? What we want to try is, if you are conservative, which means what? You're not pouncing on a lot of trades, right? Sometimes you doubt yourself, sometimes you're not too sure. You only take the best of the best trades. The truth is that if you're really conservative, you're probably not going to take a lot of trades in a month itself. Probably not a lot, just maybe a couple, right? When you're super confident. You're aggressive, you got a ton of trades, even trades that you're not confident. right? So what we're trying to do is we want to stretch ourselves. First off, I want you to recognize first, who are you? Are you more aggressive? Are you more conservative? Which is why I asked you your number, right? You got to recognize first, who are you? Why? Because why? As an aggressive player, when we trade, right? Sometimes we enter a trade, we took a loss, and then we feel emotionally affected, right? And then we want to what? And then when the next trade come, right, we may want to pounce in again on impulse. Aggressive players tend to pounce in a lot on impulse, right? Because you now recognize yourself, I am an aggressive player to a certain degree. This trade that's where you got to have an inner voice, right? Inner voice. This trade that I'm entering right now, is this the aggressive me trying to enter? If I am all calm down in a more realistic manner, would I enter this trade? So if your answer by then is, I want to enter, but if your answer by then is the calmer you, there's always a calmer you inside that tells you, no, this is your aggressive side talking to you that you should enter. The moment you have that doubt in you, where your inner voice is holding you back, that's where what's happening. You are now stretching yourself. You are now stretching your abilities. Here's how I actually evolved along the years. I was an 11, right? I actually stretched myself down to a 10, to a 9, to 8, to a 7. I mean, these are like numbers, right? But in myself, that's where you go down lower and lower. I'm actually stretching myself and pulling myself. It's like I'm maturing, because I know there's no way I can be full-on aggressive and be consistently throughout the years. I'm just going to die at some point in time, which I did. And I busted a lot of accounts, right? Because of 100% pure aggressiveness, right? So I know that in order for me to treat this as a business in long term, I got to taper myself down. So you got to stretch yourself. Even at your 7, stretch yourself back a little bit. Pull yourself back a little bit. If you're conservative, you want to pull yourself to aggressive more a little bit. Because aggressive, conservative, you like, sometimes I only want to take 100% winning probability trade, right? If it's 80%, maybe I don't take. So that's where you want to stretch yourself a little bit. Actually, 80% also can take, right? It is okay. Because if your win rate is about there, you are now increasing your number of trades, but your win rate is about there, you're going to make a lot more money. So that's where when you're conservative, let's say you're 3 or the 4, you can stretch yourself to a 5, to a 6, to a 7. All right. So we want to try to stretch ourselves to the ideal sweet spot of, if today you were to ask AI, what would be mentally level, right? What would be the best kind of trader? They tell you somebody who has the ability to pounce and probably ability to know when not. Obviously, these are bots, right? We are humans, right? So this is where we want to stretch ourselves. All right. All right. We want to stretch ourselves. Now, here's the thing. Earlier we talked about the capital, right? So okay, I want to make 3,000 in the first month, right? But I only got capital of 3,000, right? So number one, this is the expectation is not meeting the reality. You know why traders fail? Especially when you're aggressive. I think that's the worst combination, which is why I got busted so many times. When you are aggressive, and then, or you are tilting more to aggressive, and then you want to make, aggressive means you want to make a lot of money also, right? Right? Aggressive means you want to make a lot of money. And then you got not so much capital. You want to make a lot of money, you don't have a lot of capital to start. And then worse, I'm going to ask you, okay, you are aggressive. You don't have a lot of capital. Okay, that's fine. So if you think about this way, it's still fine, it's still fine. It means what? If you're aggressive, you don't have a lot of capital, means you take smaller trades, right? Means what? Means but I try to taper you down so that you don't risk too much. Let's say you don't risk 10%, right? I try to taper you down, assuming you only risk 2% per trade, right? But you're aggressive, you want to make a lot of money. But I do have a lot of capital and I'm only risking so small. What is going to happen? How can I make a lot of money if I'm only risking so small? I'm only risking so much small dollars per trade. You take more trades. All right. So now, that is probably the only way, if, okay, not say only way, but that is a way that you take more trades, right? You take more trades so that you can have more trades, more wins, more small wins to make up a big volume, right? Quantity, right? So versus, let's say you got a big capital, bigger capital, you can take lesser trades, for example, right? So that is a way. But then the next thing that I'm going to ask you is okay, your lifestyle. Your lifestyle. Your lifestyle means what? What is your available hours to trade in a day itself? Again, everybody is different, right? Again, everybody is different. So, for example, some can trade in the morning, some can trade in the afternoon, some can trade throughout the day, some can only trade 1 hour in the evening or at night, right? So if you tell me you are aggressive, you want to make a lot of money, you don't have a lot of capital, and you can only trade 1 hour a day. You can only trade 1 hour a day, you don't have a lot of capital, but you want to make a lot of money. This is probably the worst combination. Right? You want to make a lot of money, but you don't have a lot of time to trade. And you don't have a lot of money to trade, to want to make a lot of money. This is the combination for what? I think this is a combination. You want to make a lot of money, but you don't have a lot of time to trade. So means what? During that 1 hour of trading time frame, you're going to take a lot of trades, right? And how many good trades would there be in 1 hour, for example? Not a lot, right? So obviously, that scenario kind of person, higher probability is going to end up what? With a busted account. So you know, I'm trying to link. So if you are that combination of person, no matter what trading system you learn out there, I give you the trading system, you put that into a combination, is kind of really difficult for you to actually last long. Because like eventually you're gonna get frustrated. Just not making enough money that I want. Like I'm then the only way is that you're gonna get tilted, you're gonna start taking a lot more trades and this and that. Eventually, I think it's just a matter of time. You're gonna get flushed out. Right? So now versus, let's say you're like, this is scenario A, right? For example, there's John, right? And then there's maybe Adam with who is really conservative, or another scenario, right? So everybody's scenario is different. What I'm trying to see, I'm trying to link them up together. You got to tweak the trading system to you, to your personality, to your goals, to your lifestyle. All right. So now I'm gonna try to show you, right, how can you tweak it to your lifestyle. Okay. So now in this scenario, okay, let me break it down further. Lifestyle. Okay. One more. Everybody has different what? Strengths and weaknesses. Right? Everybody has different strengths and weaknesses. So, you know, for example, some of you are very good at looking at chart patterns. Oh, this is double top, or that is ascending triangle, or that maybe you can tell me there is some harmonic pattern, and this is that, and that is that, right? Some of you is really good at reading candlestick pattern. Oh, there's a good pin bar over there, fantastic, blah 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 blah. Or some of you can tell me that oh, you saw the resistance level over there, that is a strong one, this and that. Or some of you can tell me like, oh, you know the fundamentals, right? The based on the economy right now, based on the USD right now, this and that right now, and based on the numbers, the GDP, the this and that. I could never be that kind of person. I know there's a lot of people who are really good at that, but I can never be that. You know, so what I'm trying to tell you is that everybody, even in trading, everybody is good at different things. Everybody has their own strength, right? Even when you're siblings, right? Even identical twins have different strengths, right? Some of you can do this well. For example, some of you can play soccer really well, and another one of you can, let's say, can sew really well. You ask the person who can play soccer to sew, he's never going to make it. Ask the person who can sew really well to play soccer, he's never going to make it, right? One is good at hand, one is good at leg, right? So if today I try to force feed you to trade this method of trading, this specific trading strategy, if you can't get it, you can't get it. You can push to get it, but maybe out of a scale of 10, you can only push to a level of 5. You can never reach mastery level. Okay? So which is why you got to, I mean, this is, I'm not saying, as you know, trading is not easy, which is why you got to expose yourself, ideally speaking, to a range of different stuff. For example, in our one core program, we expose to 16 different strategies. Why? Because I know different people click with different things, right? So for example, you're going to expose yourself to a lot of different stuff, different strategies, different way of trading, maybe even fundamentals, and all the different way of trading, such that you know what clicks with you. You know, like certain things you can never get it. Don't bother wasting time trying to figure that out. You don't get it, you don't get it, right? Even if you get it, you will never be a master of it. Unless you, I don't know, you put a lot of work. But certain things you just get it. Right? And the more you do it, you're like, ooh, I'm actually learning and progressing really fast. Right? So trading itself is a very big field where there's a lot of things that you can learn and become really good at. Right? So you don't have to, you first you got to be expose yourself, right? To look around YouTube, right? Learn around to all the different ways, right? And to kind of see what clicks with you, right? And then you start zooming on that specific thing itself. So first you got to understand where your strength is. If your strength is in like all the fundamentals, great. Then I'll say go ahead with fundamentals. If your strength is not fundamentals, then no, stay away from it, right? Purely focus on certain parts, maybe technical, certain parts, what kind of technical, right? Right. So, and let's say if you are uh if you are conservative, for example, and then you don't want to set such a tight stop loss, right? You don't want to set such a tight stop loss, but your trading system tells you that hey, you need to set tight stop loss. Then you got to tweak it, right? You got to probably tweak that trading system, the trading methodology to fit the way that you're comfortable with, right? So I can never push an aggressive trader to set a big stop loss. No way. They tell me I'm crazy. Ezekiel, I can't make money this way, right? Your stop loss is too big. The risk to reward ratio sucks, right? Just like you cannot tell me to set big stop loss. I can never do that because I know it doesn't make sense to me, right? Because I'm always there for the big win, right? So you got to find what works for you. So we are trying to build a system around you, right? Like even to the range of your acceptable range of stop loss, your acceptable range of take profit, right? So everybody's strength is different. Everybody weaknesses is different. Weaknesses, it's good to know them. Where is your weaknesses? Oh, I tend to get emotional. I tend to tilt when this happens. The moment once you recognize that, that is your weakness. That is your weakness talking to you. What I would really suggest is like look at your strength, write it out. Look at weakness, write it out. Like what triggers you? How do you get emotionally affected? You know, sometimes the moment once you start writing it out, that's where you realize, that's what happened the other time. I think I got affected by that way. For me, it's like in the past, not now, in the past. And every time I have a fight with my wife, I cannot say fight, like a unhappiness, right? Quarrels. And that always cloud me. When I go and trade, I just can't make good trades. I feel frustrated. I just can't have a clear head to trade, even though I know I need to have a clear head to trade, right? And then when I start to seeing this as a pattern, that's where I know the moment when something happens to me in personal life, that's where I'm like, I'm not trading that day, right? Because it's just I'm just gonna get affected and kill me, and it's gonna kill me that day, right? So that's where you got to recognize. The moment more you recognize, the moment you can weed away all this stuff, right, and play to your strength itself. So learn the mess or get exposed to a lot of different strategies, different way of trading. Figure out what can click, right? What you can click with, right? So you see, I'm starting to piece them together, right? I'm starting to piece them together. All right. So now, here's the thing, right? If we go back to our scenario of of uh John. John wants to make a lot of money, aggressive guy. And then he doesn't have a lot of capital to start, but he wants to make a lot of money. So number one, the expectation is not meeting reality. Okay, side tip, right? In order for us to be truly happy in life, right? There is a formula to happiness. the formula to happiness is what? Is when your expectation meets your reality. For example, you like, I want to make money, but your reality is that you cannot make a lot of money. Right now, you're stuck. Every day you try to make a lot of money and keep entering trades. But then every day you can't make a lot of money. And then you keep risking big risk percentage. What is going to happen? You're going to get obviously unhappy. You're going to get emotionally affected, and that is going to affect your entire way of trading. So what can be changed? Can you change your reality as of now? Probably not, because your skill set is still the same. Nothing changed, right? So if you can't change your reality, you can and you got to change and manage your expectation. That's where you got to realize, I think I'm aiming too high. I think I'm too idealistic. I can taper down my expectation first to meet my reality maybe, and slowly grow along the way. That's where it becomes realistic. So first thing, right? John, who wants to make 3,000 in 3,000 with capital of 3,000 in a month, expectation, reality, not the right fit. Got to taper, right? You can't taper your capital, you taper your expectation, right? I'm telling you the truth. I'm sorry, it hurts, but that's the truth. Yes, there's funded account these days. I get it, I know, but we can go there if you want. But again, there's another challenge of its own, right? But hey, expectation needs to meet reality. All right. So now, assuming now, okay, let's say assuming we risk 2% per trade of a capital of $3,000. So we don't over risk, right? We don't risk 10%, risk 2% per trade. 2% per trade of a capital of 3,000. 1% is $30, 2% is $60, right? So if we risk $60 per trade and we want to make $3,000 a month, right? We want to make $3,000. So, but we're only risking 2%, $60 per trade. $60 to make $3,000. We need, if it is $60. If it's a risk reward ratio of 1:1, right? Let's type it out. So 3,000 capital, risk 2%. All right, so we are risking $60 per trade, right? So if it's a RR of 1:1, so meaning we risk $60 to make $60, we will need what? We will need 50 winning trades. Yeah, we need 50 winning trades in a month itself with a 2% risk percentage, 2% risk, right? So is it possible? Okay, now how many trades are you taking a month? So this is where I ask you back to a question. Look at your trading system. That every trading system, every strategy has a cap. So for example, if you are trading, let's say, assuming a head and shoulders pattern, for example, you're trading a head and shoulders pattern, right? Okay, that one has lesser trades. You're trading a head and shoulders pattern and one pair, and let's say you're trading in a 1 hour time frame. How many head and shoulders in the 1 hour time frame of one pair would you have in a month? Maybe 1 hour, maybe 10 to 20. That's probably about it, right? Not a lot. So if you're trading that's the cap, right? That's the cap. 1 hour. That's the cap. So if you're gonna get 50, if you want to find 50 winning trades, obviously that strategy cap doesn't fit, right? So then what? Here's what you can do. You obviously, but let's say this is your strength, right? You want to try to hit it. What you can do is to drop the time frame. Now, obviously, if you drop the time frame, more bars, more setups, more trades. So maybe you can then find 50 head and shoulders in a 15-minute time frame or even a 5-minute time frame, right? But the question is that your strength now? So is trading the lower time frame your strength? Fast pace, multiple bars. You gotta be quick, you gotta be sharp, you gotta be fast. If that is your strength, great. So then I say, hey, you've kind of found the combination, right? You kind of found a combination. You found the right strategy in the right pair, right? A pair that has head and shoulders that with a high win rate. right? At the right time frame where you can manage. But if your answer is no, I think 5 minutes is too fast for me. I think 15 minutes is a bit too fast. I think the lowest I can go is 1 hour. Okay, then you got your answer. So which means what? Head and shoulders, 1 hour time frame is not going to meet your expectation. 50 winning trades. Maximum head and shoulders number of trades in a month, say 15. Out of the 15, they're going to be losing trades for sure. Right? So realistically, you're going to break down out of 15, maybe I lose half, for example. Right? Realistically, if I lose half, maybe I only win 7. Right? 7, I if let's say now my risk to reward ratio gets better, let's say if it's 1:2, for example, I make I win 7, I lose 7, assuming, right? So 7 times, if your risk to reward ratio is 1:2, you make 7. My math is 7 times 60, $420, right? Yeah, $420. So you make $420 that month. 420 of, let me calculate, 420 divided by 3,000. It is 14% growth. It is still very good, okay? It is still very good, right? By any standards itself. Now, okay, so here's the thing. I'm trying to zoom it down, right? And trying to show you how do we break this down. All right. Number one, you want to know what strategy, where is your strength? What is your available time frame that you can trade? Right. So let's bring it back up. Personality, 1 to 10. Where are you? If you're more aggressive, try to stretch yourself. Stretch yourself to taper you a little bit more. Right? So that you know when is your aggressive side talking, so that your calmer side can tell you, hey, this is your aggressive you talking. If you're conservative, try to stretch it to the other way. Right? Then your goals. Like I said, expectations meets reality. Hey, I think it's time to look at and truly look at your goals and taper. Okay. It's not that, hey, you still don't want to make, let's say you want to make $10,000 a month. Yes, I want to make $10,000 a month when I was young, right? But then when? Can you expect it immediately? No, right? Compound. Yes, compound. You don't expect it immediately. How about expecting this in 1 year's time, in 1.5 years' time? Assuming I start small, $3,000, for example. I start small, right? I grow my capital until maybe in 1.5 years' time, if I base on my on the risk percentage, for example, I can probably reach there in X time. So that will be my goal. So even though if I'm making $420 a month, I know that I am on track, the step by step, I am on track to my goal. Then there is expectation meeting reality already. So then you're fine with it. Because you know, even though you're making $420 a month, right, that month, you are actually on track. And it's actually a win, a big win. It's a cause to celebrate. So that is where your expectation meets the reality. All right. So you got to see where, and then set yourself and align to it such that you know your growth percentage. Whether is it percentage, whether is it dollars, so that you can hit wherever you want to hit. All right. Then next, we come down to your lifestyle. What is your available time to trade? Now, like I said, if you can only trade 1 hour per day, hey, you got to adjust your trading style. If you can only trade 1 hour per day, and you cannot trade the lower time frame, it's not you, right? It's not you. You can only trade the higher time frame, maybe the 1 hour, maybe 4 hour, maybe you can only trade the daily. So realistically speaking, you don't have a lot of trades a month. Because how many good trades are there in that 1 hour that you're available to look at every day? Realistically, not a lot. So what can you do now? You got to find, let's say you can trade the 1 hour time frame or the 4 hour time frame, for example. You got to find more pairs that fits the strategy. So for example, let's say you identify you're good at certain strategy, right? Which is your strength. You're good at certain strategy. Okay, let's say you first off, you want to figure out, look at all the strategies and see what clicks with you. You probably already know now, right? You got to find that strategy that works on which pair. You got to start adding more pairs because you only got 1 hour to trade. Your 1 hour means what? There's not a lot of trades, right? So you got to find more pairs to trade based on that strategy itself first. Okay, then that's where you want to trade. You know, sometimes like you only got 1 hour to trade. It's not that it's not doable. It's now trading on the right time frame. Whether you're trading a 4 hour, whether you're trading a daily. If you're trading the daily, 1 hour a day is enough, right? Or that I only probably need 10 minutes a day if I'm trading the daily time frame, because I only look at the chart before the next day bar, right? It's straightforward. So now, if you are trading the lower time frame, that's easy, right? If you're trading higher time frame, you need more pairs, right? Now, here's the next thing. But there is another way, right? There's another way. That is your what? Your risk percentage. Now, I'm touching on a very risky topic. This is not an advice. This is just theory, education, right? Okay, just do your own due diligence. Everything that I said earlier. Okay, so first off, you got to understand, let's say your risk percentage, right? Let's say you're risking 2% of $3,060 per trade. But assuming you can only in a month, if you look at your trades, probably Ezekiel, I probably based on what I'm looking at, I can probably only take 5 trades a month, just 5, based on my available 1 hour a day. So if 5, realistically speaking, I risk 2% per trade, I may or may not make a lot of money. It's going to take quite a long time for me to reach my goal, right? How? What can be done? So that's where I tell you, hey, there's something that can be done. That is your risk percentage. But so which means what? You can increase your risk percentage. Why? Because number one, you are now taking lesser trades. So meaning to say that if you're only taking 5 trades a month, in a year, probably you only got 60 trades or less, right? You're taking lesser trades. Number 2, you got to back test your system. You got to check how many losing trades based on your specific trading strategy. Let's say on that specific pair, let's say you back test the 2-3 years. Based on the last 2-3 years, if you take every head and shoulders in the last 2-3 years, consecutively, how many losses does it have in a row? If you say that, hey, based on the last 2-3 years, right, that I've seen, the most that it has is 5 losses in a row. Most. Okay. So now, if that's where you can if you risk 2% per trade, right? If you got 5 losses in a row, it will be 10% down. My question to you is, can you stomach a 10% drop? Right? Can you stomach a 10% drop? If your answer is yes, then cool. So then let's up it to 3%. If it's 3%, right, 5 trades losses in a row is a 15% loss. Can you stomach that instant 15% loss of your capital? If your answer is yes, then we can go up 4%. Right? If 5 trades in a row, 4% loss is now 20%. Can you stomach a 20% loss? If your answer is yes, let's go up 5%. 5% is 25% loss. 25% loss is getting a bit risky. And let me tell you why. Okay, 25% loss. Can you stomach? I mean, maybe. So maybe your answer is about 4. Right? Maybe your answer is about 4. But here's the thing. In textbook theory, you got 5 losses in a row because no emotions. Pure technical setup. But in reality, there's emotions involved. When there's money involved, when there's emotion involved, sometimes you enter trade that you are not intended to enter. So maybe that 5 losses could become 10 losses in a row. Could be, right? Could be. So now, if you risk 5% per trade, 10 losses in a row is 50% down. Can you stomach a 50% drop of your capital? Probably in a week, let's say. And the answer is probably no, because 50% drop is very hard from a 3,000 to become 1,005 back to 3,000 again. It's easy from 3,000 to go to 1,005. It's hard from 1,005 to go to 3,000 because that is 100% growth, right? So you got to find the balance. I'm telling you, if you have found a system because you got low number of trades, high win rate. Here's the key. If you got high win rate, so if you got high win rate, low number of trades, your risk percentage, you can look to go up because you don't have a lot of trades. But if you got a lower win rate, so if you got a lower win rate, right, then your risk percentage cannot go up because theory, let's say you got 5 losses in a row, reality maybe 8, 7, right, something like that. So you got to always set a buffer. You always set a buffer. So therefore, you got to taper your risk percentage, not just to your personal greed level, your goals level, but also your system level. All right? How much your system is proven to give you. All right, certain system only got a cap. Certain system, maximum number of trades this, maximum number of wins is this, maximum number of RR is this, maximum number of win rate is this. That's the cap, right? Every system based on each specific pair has a cap, unless you drop the time frame to has more trades. All right, the lower the time frame, the more trade it is. The higher time frame, the less trade it is. All right, so there is always a cap. Now, how can you expand that? Let's say this is one, but then hey, this is only one pair. What if you start adding the second pair, the third pair, the fourth pair? So then it becomes more and more profitable for you itself. Okay, so good. So far, you guys are absorbing it. I've been rambling on for quite a while. Are you guys absorbing it? Is it good? All clear? Understand? Let me know. Let me know in the chat. Let me know in the chat. Right? Yes, good. Yes. Let me know. Let me know. All right. Okay. So now let's put still awake. Great. All right. So now let's put them all clear. Thank you. Let's put them together. Right? Let's put them all together. Your personality, your goals, your lifestyle, your strength, your winners, your risk percentage. Right? You also got to check what is your win rate and your RR. Okay? So what? Some traders, let's say I'm a more aggressive side, right? I'm tilting myself to a more aggressive side, right? Like I told you, probably a 6.5 or so, right? We want to make big money, right? So for me, my RR, usually I'm aiming for more. I am probably not satisfied with a 1:1 or 1:1.5. I mean, it's good, but it's not more, right? And my character, I want more, right? Your character, everybody is different, right? My character, I want more. So therefore, my kind of trade setup would be, my RR would be more. I will always aim for trade and my strategy whereby my RR is aiming for more. Okay? But when your RR is aiming for more, here's what happens. Right? Here's what happens. Your win rate will tend to drop. Because why? Because now you're aiming for bigger RR, right? Price, sometimes it goes up to your big RR, sometimes it goes up but doesn't touch your TP and then it drops back down, for example. So your win rate will drop. All right? It's a trade-off. It's a trade-off. As long as you find the right balance, that's why your trading strategy comes in. Your trading strategy should also fit your personality. You gotta find the right balance. Let's say if you are more heading towards the more conservative side, so you are not a person who want to aim for big. I'm not going to aim for big RR. That profit is too far, Ezekiel. It doesn't make sense. It's too far. I don't think it's going to go there. You're always gonna think about that, right? There's a rejection here. There's rejection here. I don't think it's going to go there. Hey, there's nothing wrong. It's just how you think, how I process the chart. I'm willing to take that risk of it going to go up so that I can hit my big win. I know my win rate is lower. For you, right? It's like, you're not going to take that risk. I just want to get in, get out, decent profit. Not wrong. Again, we are all different, right? So for you, your risk to reward ratio is not big. Your risk to reward ratio maybe is 1:1, 1:1.5, 1:2, something like that. But when you have a more decent risk to reward ratio, your win rate should increase so that you got your trades, you got more trades, you got more winning trades, even though your RR is not big, so that you can still be a profitable trader, right? If I got the same number of trades as you, my RR is more, my win rate is lesser, but because my RR is more, it covers my losses. So then I can probably make that amount as well. So I am fitting my trading style, my personality, right? And create a system around myself. You get it? You get it? So you got to see what is your own. Which direction are you more inclined to? Because if I tell you, hey, I'm showing you a system that's going to make big RR, you're always going to aim for big TP. But then reality is that this is not me. This is not you, for example. This is very hard for you to going to accept and trade confidently every single time. You got to create a system around you that allows you to trade confidently all the time, because that system is you. That system represents you. It's all custom made around you itself. Following me? Following me? Yes, yes, yes. All right. So, good. So now, here's what you got to do. I already listed your personality, your goals, your lifestyle, your strength, your weakness, your risk percentage, your win rate, your RR. Right? You got to create, you got to look at all this, right? Look at all this, spend some time, write it out, type it out, whatever it is, come out with all this. And then take a step back and look at your trading system. Is the way that you are trading right now a right fit to your personal character, your personal strength, your weakness, etc., your goals, right? The answer is may or may not be, right? Probably not. And then how are you going to tweak it? Are you going to change the strategy? Are you going to change the time frame? Are you going to find more pairs, right? Are you going to increase your RR? Are you going to drop your RR? Are you going to find trades that increase your win rate, etc.? So you got to do, you got to tally, right? You got to tally your expectation and reality, your system, right? The training system to match with you yourself. Everything is when it is in one, is a right fit. That's where you know you nail it already. All right, this is a psychology topic, but I think I hope that you can see by now how important this is, right? In fact, I would say, right, most of the people out there, they don't tweak their trading system to themselves, right? Yeah. So am I right? Right? Yeah. So if it's good, please let me know. If you're learning something, please let me know. Right. That's what I try to give. I like to give non-stop value insights. Right. So yeah. Your system is just made for yourself, right? It will not make sense to anyone out there. That's right. Your system is for yourself. It's not going to be a right fit, 100% fit to somebody else. It's not going to be. Everybody is different. All right, cool. All right, come. Thank you. This is valuable. Thank you so much. Right, so let me know if you got any questions. Now is the time to ask. Right, let me know. Yeah, throw in your questions. Yep.
So now it's our Q&A sessions.
Yeah, if you got, send it here. If you can't think of it right now, you can always send it to our group chat, with Marketsforu, or direct with me. Right, so this is going to come along with you, but I hope that you guys really get this new insight installed in you, such that you can now view trading in a more clearer light. I would say why everybody is different, and why we are probably not getting whatever that you're learning, right, you cannot put in right away because it's just not a perfect fit for you. Yeah. All right, thank you. Right. Yes, you struggle with multiple pairs, indices. Is it better to hold into one? Always start from one first. One strategy, one pair. Be a master of one first. Then you slowly expand to other pairs. All right. Get it? Thank you. Okay, so yeah. Recording, right? Recording. So Yu Zheng, maybe you want to share that?
Yep, sure. So if we don't have any more questions, then we want to say a big thank you to Ezekiel for sharing today. We learned today like other people's strategy might not suit mine. So from what you are sharing today, it's like telling us to go through our lifestyle, our strength and weakness, our goals and personality to craft the more suitable strategy that is best for myself. Yeah, thank you very much. And yeah, so let me share my screen again. Yeah. So as you can see, I have shared on screen, this is a QR code. So this QR code will lead you into a Telegram group, which is an exclusive group for this seminar, for this webinar. So you can get exclusive signals, market news, and also free 2025 forecast ebook. Yeah. So feel free to scan so that you can join the Telegram and then get the news from there. Other than that, I see some of you are asking about the video, right? So you can see from here, we are having all the handles for our social media. We have Facebook, Instagram, and also Telegram and YouTube. So we have this YouTube channel of our official channel. So maybe after some time, we will uh, how do I say? We will put up the recordings on our YouTube channel, our official YouTube channel. So please stay tuned and pay attention to our YouTube channel so that you can go and listen again what Ezekiel have shared today. All right. If you have any more questions, feel free also to contact us from our website. You can go through our website, www.marketsforu.com, and then our CS will be happy to help you there as well. Yeah. All right. If we have no more questions, then thank you very much. Thanks again, Ezekiel. It was nice
Thank
having
you.
you
Thank you.
for the 3 sessions. Yeah.